We continue to see geopolitical tensions and really uncertainty about where central banks around the world are going as well. How do you position amid all of this volatility?
Sure, thanks for having me on the show. I think that one of our near-term focus is definitely to right-size risk exposures and to de-risk to some degree, if possible. And that's exactly to what you said earlier, the fact that, obviously the market has been quite volatile on the back of geopolitical headlines. And underlying all that has been this trend of worries about a more aggressive tightening by global central banks. And that, at least from a market's perspective, seems to have raised the odds of a much slower growth trajectory towards the year end. We don't think that necessarily will happen, but we do think that this seems to be the direction the market is on at the moment. So as a result, I think that we have been looking at strategies that have a bigger balance between protection and some exposure to maintaining some exposure to growth. And our overall view on markets has been one that tries to boost return in what we think will be ultimately a range-bound market this year.
Right.
So really focusing on tactical opportunities, really focusing on the opportunistic trades.
I've heard lots of investors talk about China as that ray of hope when it comes to further pressure on the markets, because we're expecting them loosening fiscal and monetary policy as well. What are your expectations of how much support the Chinese markets and policymakers can actually give to the broader markets, especially among EMs?
Sure. So actually, we have been looking at the China market as well, but we do think that so far the amount of policy easing hasn't necessarily really surprised us, and I think that it's probably fallen short of what some of the analysts have expected, both on the fiscal side as well as the monetary policy side. And as we head into this more volatile environment, as we head to into what probably will be the first rate hike by the Fed in many years, this will probably even shorten the window further in terms of how much further policy easing we can see after March. So we do think that there is some downside risk still to, if you look at earnings, if you look at GDP growth, and we do think that it could translate further into downside risk for global growth. And coming back to this overall environment, we have seen multiple headwinds to global growth this year. China is one source of that, and that just reinforced this argument, I think, to right-size your expectations for return this year and focus on finding protections, the balance between protection and growth.
Will there be any managing of expectations or any attempt to inject more confidence in China's recovery when we hear from policymakers at the MPC?
I believe there will be. I believe there will be a lot of gestures in terms of trying to support corporate confidence, trying to shore up consumer confidence. But we do think that there are practical challenges from China policymakers' perspective. One, of course, is the fact that COVID continues. So the persistent battle with COVID will divert a lot of policy attention and resources. On the other hand, there's the global environment, which really isn't getting better. From a geopolitical side, and also you have a Fed hike that's probably going to be a lot more hawkish and faster than the last rate hike. And looking back at how the PBOC tends to respond to those Fed policy rate hikes, generally we don't tend to see a huge divergence in terms of directions. Sure, PBOC probably would not end up tightening policy, but we think the room for further easing is limited. So given these constraints, I think there's still a big practical challenge in terms of how much easing can be delivered. And lastly, don't forget that deleveraging, both in terms of deleveraging the housing market and deleveraging local government balance sheet, seems to remain a pretty high priority for the medium term. So all of these are, I think, limits in terms of how much easing we can actually see this year.
There also seems to be a cap being put on how optimistic we can be about a tech recovery for some of these Chinese names, right?
Yeah, I think that the assumption in market seems to be that tech regulations are behind us, and this year will not see any more dramatic changes. I do think that some of that optimism is a little bit wishful because there hasn't really been a very clear official signal that tech regulations are done, and I think that remains a source of risk, particularly if you think about external environment from a geopolitical side being quite volatile. I think policymakers will still try to use this window as much as they can to do all the reforms and changes that they want to implement. So I do think that we're actually still in that window where they're trying to squeeze in as many policy changes as possible. It's a little bit too premature at this point to say that all the regulations are behind us. And some of these regulations are pretty long-term in nature. So in terms of understanding how their impact are on companies amidst this constantly changing macro environment, I think will continue to be a really big challenge for investors.